Welcome everybody to our next live stream. It has been about 12 days since my last video, and I'm going for more quality over quantity right now. Right now, when it's getting close to holiday season, I notice views are a bit lower on YouTube. I don't want to bombard you guys with a new video every day unless it is very high quality. And oh boy, do I have some information for you today. What's been going on the past couple of weeks is going to be a very action-packed episode. And just go ahead and type 1 if my mic is sounding good, and we can go ahead and get in today's episode. I want to do a deep dive on what's been happening in the markets. Why has the markets been melting up lately? And this is something I've been warning about. If the Federal Reserve doesn't stop inflation, if they give up the inflation fight, we could see a market melt up. So I'm going to explain exactly what's been happening in the markets over the past couple of weeks, why they've been going up, but also some very worrying things that we need to pay attention to that nobody is really looking at right now, because you always need to be doing the opposite of what the market's doing, because the insiders are definitely doing that. We've got some new information of some major CEOs of some of the biggest companies in the world. They're dumping stocks at record pace. And also what many of you are here for, another major critical bank has declared itself insolvent and is going to fail and will have ripple effects throughout the whole global financial system. So everyone, we've got so much to cover. It's going to be a very action-packed episode again. So you know what time it is. Let's not waste any time. Let's get straight into the news, the facts, and the data. So first things first, what we need to talk about and address is the market, okay? It's gone up about 10% this month. It's gone on a violent rally, and I'm going to explain exactly why. It's very simple. S&P up at nearly 11% over the past month. Gold is over $2,000 an ounce, which is very good for my bullion investors. But Bitcoin has been on a tear. And I've been telling people around 20,000 since 20,000, 25,000 that you want to have a bit of Bitcoin in your portfolio. Bitcoin, gold, silver, we're all on the same team. There's no need to fight, with the gold, silver community against each other. You can self-custody Bitcoin. You can have it in cold storage out of the banking system. We saw when the major banking crisis happened in March, Bitcoin actually went up. But I'm not saying go ahead and put all your money, your whole portfolio in Bitcoin. It's just another diversification tool, because what I said, when we get this market melt up, Bitcoin will outperform the stock market, and it definitely has. It's up around 130% just this year. So why have we been on this market melt up? What triggered this? Okay, well, it's a few things. So first things first, it was this inflation report. Now, the market should be worried about this because you shouldn't rally just off one inflation report. But this is what got a lot of people on Wall Street very excited. But I'll show you another chart in a moment why this may just be a short-term boom. Okay, so inflation was flat in October from the month prior. Core CPI hits 2-year low. So what do you guys think? Do you guys think inflation is over? Are you seeing prices tumbling? Let me know. I'm not seeing prices tumbling. I'm still seeing them climbing. So the consumer price index was flat in October from the previous month, but increased 3.2% from a year ago. Now, again, these statistics have been changed time and time again, and they changed the way they record the CPI again this year. So these are manipulated figures. Excluding volatile food and energy, the core, which is the Federal Reserve watches more closely than the CPI, only rose 0.2% and 4%. So this is why the markets have been rallying, because following the report, traders took any potential Fed rate hikes almost completely off the table, according to CME Group data. So a lot of people thought, okay, the inflation problem, it's over now. The Federal Reserve is going to start cutting interest rates next year. And yes, while that may happen, we're definitely not out of the woods yet. Now, also, another reason why the market has been rallying in all assets, really, we've been seeing melt up, is because of the dollar. This is the US dollar index, the DXY. This has gone from 106.8 all the way down to 103.4. Now, pretty much when the dollar goes down, everything that priced in the dollar goes up. Okay, so if the dollar loses purchasing power, it hurts consumers and people that hold US dollars, especially in the bank account. but it makes all assets go up. Another thing that the markets are thinking that inflation is over is oil. WTI crude has fallen from around $85 in the past months to $75. Now, also another reason why oil may be falling is because maybe they know a big recession is going to come. And whenever there's a big recession, there's going to be less output, less demand for oil, and that can cause oil to fall. So sometimes they should be careful what they wish for. But this is what we see time and time again. We have seen this already in this 2 to 3 year period. We get a couple of good CPI reports, the market rallies, only to then crash again when we get a bad CPI report. Now, what nobody's thinking of is the broader inflation cycle. And what if this cycle that we've just witnessed was just the first cycle and we're about to get another wave of inflation? Because look at this chart here. This was what happened to inflation. The last great inflation cycle we saw in the 1970s. We had a huge rise in inflation in the late 60s, early 70s to 6%, and then it tumbled. And a lot of people thought, okay, inflation's over. But no, it then went even higher in the mid 70s and late 70s, and then it dropped again. And people thought, okay, maybe inflation is over. But you can see here, the bottom of inflation was still much higher than the bottom of the first cycle. And then we saw, pretty much crazy inflation in the late 70s, early 80s. And this was, the blow off top of inflation before it came tumbling down. And this could have been 2020, 2021, and we could be falling here only to going to experience much higher inflation in 2024 and 2025 if the Federal Reserve cuts. Because look at this. This is why we've been on a broader 40-year bull run in the markets. I'll move myself so you can see this chart here. This is interest rates. Again, the exact same thing what happened with interest rates. They went up a bit in the early 1970s, and then they thought inflation was over, so they dropped them, only for inflation to surge again in the mid-1970s. They dropped them again, but inflation surged again, and we saw this three cycle rise in interest rates. And where we are here could just be the start of what we saw in the 1970s. It could just be the first cycle of hikes. Maybe they'll do a couple of drops in 2024, but if they do too many rate cuts in 2024, what are people going to do? They're going to go out there, refinance, and spend like crazy. Now, another chart here. This is why markets melt up, is because the purchasing power of the US dollar continues to collapse. We can see here, it is a one-way street, just only going down. And if this continues to happen, yes, in dollar terms, the market may increase, but your purchasing power will fall. And we're seeing more signs of, consumers getting in trouble. They say here that there was a record Black Friday, but what they're not really factoring is 9.8 billion doesn't get, it's a lot of money, but 9.8 billion isn't the same as 9.8 billion 3 years ago, okay? The US dollar is losing purchasing power, and yes, why sales are up 7.5%, it's because everything's getting more expensive. So you have to really look at not dollar terms how much people bought, but how much actual stock did people buy compared to previous years, because we've got another chart here that shows this is actually one of the charts that's quite worrying for me, that delinquency rates on credit card loans have just hit a 30-year high. And look at this. Here was 2008. It is much higher than 2008. 2008 was around 5.5%. Now it is over 7% delinquency rate for credit cards. And also here, this is very, very worrying also just for society. We're seeing people getting very, very angry right now. You're seeing, cost of living memes all over the internet right now. And income inequality in the United States is now its highest in 100 years. And where was it this high before? That was in the 1920s, right before the Great Depression. And if this keeps on going on, we will see another Great Depression, and we're going to see a lot of anger, and things won't, get too pretty. Because at the same time, people are maxing out their credit cards, and income isn't keeping up with inflation, their savings rate is plummeting. We can see here savings boomed in 2020 and 2021 because people couldn't spend. But ever since then, it has been falling, and now it's just a 3.4% savings rate. So we all know we're at a very pivotal point in time right now. Will the Federal Reserve cut interest rates in 2024, and will inflation fall? And then that means the melt up can continue, the market rally can continue, yes. Or will we get another hot CPI report, or will we get another surge in inflation, and will the Federal Reserve have to continue hiking and we see all these gains wiped out? Well, we just got this news a couple of days ago. Jeff Bezos is aggressive again Tuesday, selling more Amazon stock after unloading shares last week, sources say. So I remember at the end of 2019, there was a lot of big major CEOs dumping stocks, and also in 2021 before the big sell-off. So are we in a sucker's rally right now? Are we about to see another big dump? Because look at this, Jeff Bezos is expected to be aggressive in selling more shares of Amazon on Tuesday. Bezos may sell as many as 8 million to 10 million shares, which would amount to roughly 1 billion worth of stock, the sources told Faber. It comes after Bezos last week unloaded 240 million worth of Amazon shares. So he's going to be selling billions and billions of dollars of shares. So is this coincidence, or does he know that maybe this is a good time while everyone's having FOMO, while there's a lot of greed in the markets? Maybe he's selling and he may know there's some other buying opportunities coming ahead. But okay, I'm sure what most of my subscribers, they love to hear, or the stories they're most interested in, is the banking system. We did just get news that another major bank has declared insolvency. So let's get into this next story. So look at this. China's troubled shadow bank Zhongxi warns of insolvency. Okay, now there's a lot going on in China, but unfortunately, China is covering up a lot of the financial chaos that is going on in China. Their real estate market is imploding. The property developers are imploding, and their banking system is in shambles. We're seeing their central bank, they're infusing record amounts of cash every single day to try to save the banks, but it's not working. And how this is going to affect the US and the global financial system, Australia as well. Australia benefits a lot what happens in China, as well as there's a lot of US investors that invested in China in the 2015s, 2017s, when everyone thought China was going to overtake the US. And now a lot of these foreign investors aren't getting paid on the money that they lent to these firms. So it says one of China's largest shadow banks warns it's severely insolvent with a debt pile more than 2 times higher than assets. So it's pretty much game over. This is according to a letter seen by Bloomberg News. It's a further sign of trouble for the nation's 3 trillion trust sector. Zion Shi Enterprise Group told investors on Wednesday that it has debts of about 420 billion yuan to 460 billion yuan. Compare these assets with 200 billion yuan. So again, two times more debt than assets. It's a recipe for disaster. So liquidity has dried up, and the recoverable amount from assets disposals is expected to be low, the company said. Now again, who is this company? Why is it so important? Well, they are one of the country's largest private wealth managers, and is the latest financial giant to run into trouble amid a housing crisis and sluggish growth in the world's second largest economy. Again, they were the world's second largest economy, so whatever affects them will affect everyone. The manager of more than 1 trillion yuan in assets was thrust into the spotlight in August after one of its trust company affiliates failed to make payments to customers on high yield investment products. So I think it's just a matter of time. Unfortunately, with China, we won't get the heads up of when something will, blow up in their financial system. They won't tell us. We'll just have to simply wait until it happens. And we have seen this already happening. So for all those people wondering, when is it going to happen? We've already saw Evergrande collapse. We've seen Country Garden collapse. And now their shadow banking industry, which lent to all these property developers, is tanking right now. It is happening, people. And it's only a matter of time before the US follows. Look at this chart here. This is availability of mortgage credit continues to decline in the US. We can see here in 2019 it was quite high, and ever since 2019, when interest rates rising, people aren't refinancing, and banks don't want to lend either. And whenever credit stops, the economy stops. And what's it going to take for the US market to finally correct? We have seen, in some areas in LA, it has dropped around 20 to 30%. But for a broader correction or crash in the US housing market, we need inventory to rise. But look at this. Even though it hasn't risen very high yet, this is a trend reversal. We can see US properties with foreclosure filings is now starting to tick up because, again, during COVID, they weren't letting the banks foreclose on anyone, but now it is slowly starting to happen. So again, everyone, although the markets are rallying right now, all it can be is just another CPI or bad CPI report for these things to change very, very quick. There still is a lot of risk happening in the financial markets. We see a lot of insider selling. There's a lot of banks still having big issues. So you're definitely going to want to protect yourself with some gold, silver, and also a hedge in case the Federal Reserve just goes full on money printer mode again to fund all these conflicts going on around the world, to fund the US government debt. In case they do, that's why I've got a bit of Bitcoin in my portfolio as well as a hedge against this market melt up. And again, if you've had some Bitcoin as well as gold and silver in your portfolio, you've been outperforming the stock market, or should I say the indexes. So what do you all think about this? Thanks for watching, everyone. Again, it's going to be going over more quality updates, not so frequent as before, but whenever some very important breaking news comes out, even if it's every day, I'll be posting. But what do you all think about this? Thanks for watching. You're awesome. I'll see you all in the next video.